It's time to prepare for one of the most significant updates of the year if you're interested in investing in Tesla. This one comes from none other than Dan Ives, the astute Wedbush analyst who has once again divulged the inner workings of Tesla investment. Do things start to level off and go better from here, you know? It goes without saying that software and FSD will play significant roles in the future. We've been here before, you see. It was observed in 2017 and 2018. When it comes to the demand that we are witnessing both domestically and internationally, we have experienced some of these white-knuckle moments with Musk. However, if you consider the scale and the manufacturing level we think they can reach, we'll be looking at next year or the year after. In terms of delivery and output, it will be 2.5 million, eventually reaching 3 million. This, in my opinion, is only the beginning of the next chapter in the growth story of Tesla. Wedbush Securities' seasoned technology analyst, Dan Ives, has been watching Tesla for many years. He is well known for being upbeat about Tesla's future, frequently increasing his price forecasts and presenting the company in bull case scenarios. He is also well known for his vivid metaphors and analogies, which include referring to Tesla as a golden EV success story and drawing a comparison between Elon Musk's donation of caviar to purchase a $2 slice of pizza and Tesla's selling of stock to finance a takeover of Twitter. We have some further thought-provoking remarks in today's video, straight from Dan Ives himself. However, what is it that he said this time that has investors talking, and why do we think Tesla bulls should pay attention? You'll have to watch through to the very end to find out. The long story, in our opinion, is still intact. Significant investments are being made in the sum of the parts thesis, fully autonomous AI, and other areas. There will, however, undoubtedly be uncertainty in the near future, almost like an albatross around the company's neck. At 7.6%, the operating margin was more in line with other automakers. Yes, indeed, as they were in a tremendous position of power, but have now yielded to rival automakers. It now depends on whether this begins to level off and get stronger from here. Software and FSD will undoubtedly play major roles in the future. Dan Ives covers the technology industry as a senior equities analyst researcher at Wedbush Securities. Regarding Elon Musk's electric vehicle company, Tesla, he is among the most optimistic observers. Ives has recently voiced his enthusiastic opinions about Tesla's growth prospects, competitive advantages, and valuation in reports and interviews. Dan Ives is not one to make ill-informed remarks, and his most recent assessment of Tesla serves as further evidence that the firm is not your typical automaker. Welcome back to Tesla Tomorrow, everyone. Dan Ives recently underlined that Tesla is deliberately lowering its prices in order to increase its market share and attract a wider range of customers. Recent price cuts by Tesla have made headlines, and the industry is reeling from the company's move. The carmaker dropped the cost of several of its models in a number of nations, but some analysts don't think this was a wise move. Contrary to what these analysts worry, Tesla's choice to lower costs is the appropriate move toward creating sufficient demand for its automobiles, according to investor and Tesla supporter Dan Ives. In addition, he projected that by 2025, Tesla vehicles may be significantly less expensive than they are now. Remarkably, Dan Ives' remarks support his belief that Tesla is the greatest investment of our time and express his continued optimism about the company. Before we continue, though, please make sure you press the like button, subscribe, and enable post notifications if you enjoy this kind of content. This will help you stay updated on all things Tesla. Dan Ives has emphasized a number of key points, calling Tesla's supercharger network a golden EV success story. Because it offers Tesla owners a practical and dependable charging option and encourages more people to convert to electric vehicles, the supercharging network is seen by Tesla bulls as a major differentiation and strategic advantage for the business. Additionally, he pointed out that Tesla made a wise decision in opening up its supercharger network to other automakers, as this will boost the company's revenue streams and market share in the EV industry. Dan Ives estimates that when more automakers join the network and pay fees to utilize it, Tesla's supercharger network may generate up to $20 billion in revenue for the firm annually by 2025. By the end of 2024, he predicted The network of charging stations would have expanded by a factor of 2.5 in order to meet the increasing demand for EV charging. Dan Ives also anticipates that additional well-known brands, like as Hyundai, Honda, and other sizable OEMs, would embrace Tesla's NACS connector, which is quickly becoming into a standard in the industry. Ives also talked about the October release of Tesla's third quarter earnings report. Ives retains his outperform rating and $1,000 price target for Tesla stock, remaining confident on the company's long-term outlook despite missing analysts' estimates on revenue and earnings per share. He contends that transient challenges that are affecting the whole auto industry, like as supply chain problems, semiconductor shortages, and rising borrowing rates, are what caused Tesla's third quarter earnings to suffer. Despite the latest price reductions, Ives notes that Tesla is still achieving record profitability for the seventh straight quarter, as well as good achievements in growth and deliveries, margins, and cash flow. It is not unexpected that Dan Ives has been a staunch advocate of Tesla's decision to lower prices. The bears refuse to acknowledge the obvious advantages of this action. Price reductions have demonstrated the potential to have a greater influence on enhancing customer happiness and retention because they allow these consumers to profit financially from owning a Tesla car. Long-term benefits for Tesla include the ability to grow its market share and sales volume, boost cash flow and profitability, improve brand recognition and customer loyalty in the global EV industry, and all of the above. Like analysts like Cathie Wood, Ives continues to be quite optimistic about Tesla's future since he sees the firm as a big player in the tech and AI arena. He claims that Tesla is a tech company rather than an automaker, which is significant since the business may earn from the monetization of specific particular services. Tesla has greater plans, and these price reductions are just one aspect of the automaker's approach to realizing its goal of becoming the top sustainable energy company in the world. Ives also argues in favor of Musk's performance on the results call, which several analysts felt was overly cautious and negative. He said that the Tesla CEO was being honest and realistic about the difficulties the company is facing now, but that he still has a clear plan and vision for the future. In light of the unstable economic climate and the necessity to concentrate on core goods and markets, he continued, Musk's remarks regarding postponing the launch of the Cybertruck and the Gigafactory in Mexico were sensible choices. According to Dan Ives, Tesla is a major player in the market, especially now that it has a competitive advantage and a game-changing supercharger network. Thus, allowing other automakers in will increase value for Tesla and its investors. Ives is an outspoken advocate for Elon Musk, the CEO of Tesla. In his opinion, Tesla is a pioneer and innovator in the electric vehicle, EV sector, and in the years to come, it has a great chance to increase its earnings, market share, and revenue. He has faith that Tesla will weather the current difficulties and carry on producing excellent outcomes in the long run. How do you feel about his remarks? Tell us in the comments below. Go ahead and click on the following video to see more about what Tesla has been up to in recent days. I'll see you over there.